Hi guys, welcome to the YouTube channel, The Novel Trading. We are continuing our mentorship program of the Forex. What we are going to do, we are going to understand how can you trade. We have understood with the main candlestick patterns. We have understood the major framework of the Forex trading in the market. How can you actually interpret the Forex data? How can you use the news? How can you use the fundamental analysis? And we have started with the technical analysis and we have done with the candles. In the last video, what we did with candlestick patterns of how we can actually interpret different types of candlestick patterns in the market. Today, I'm going to tell you a strategy. Okay, today we are focusing on accumulating all of those things and trying to understand and maintain a strategy for which we can use on everyday basis, and then we are able to take some trades, and with that strategy or setup you will be able to make profit on a regular basis. Like you have seen my previous videos on my channel when I news trade or sometimes when I take some trades, and in those live trades I am making regular profits. Sometimes also hit the stop loss. Okay, stop loss is your best friend, because many traders don't understand this concept that whenever they are hitting the stop loss or they are having losses in the market, they think that trading is a loss-making game. Trading is not a loss-making game. You have to understand that stop loss is basically your best friend in the market. Many people say that whenever the stop loss hit that you're not a trader, or you question or you doubt your trading process. But the major thing is SL is a part and parcel, because sometimes you will lose, sometimes you will also hit the target price. Whenever you hit the target price, you're accumulating profits. Whenever you're hitting a stop loss, you're having some, let's say, negative amount in your capital. If I start with, I'm giving you a proper example. Let's say if I start with $100, okay, or even I start with $1,000, let's say deposit. It's my initial capital I'm talking about. Okay, and I'm taking every trade. In that single trade, what you need to do, you can't risk all of that money in a single trade, because you have the probability of losing as well as the probability of winning. Because the probability of winning, that doesn't mean we are always going to win in the market. So whenever you have deposited your money and you have a capital of some sort, let's say $1,000, let's say $10,000, or even $100,000, you need to understand is you need to take a limited risk on a single trade. That means, let's say if I'm trading on $1,000, let's say capital, I am always going to take a SL of not more than $10 or $20. Because let's say if I'm dealing with $1,000, I need to maintain my capital. First of all, your primary objective is not to make profits in the trading. Your primary objective is to maintain the capital, is to protect the capital, and make profits with that capital is your secondary behavior in the market, or should be your secondary goal. So for maintaining or for protecting my capital, I am going to take a stop loss of $10. That's it. That means if I am wrong, if I'm losing, I am not losing more than $10 in the market. But whenever I'm winning, my reward will be more than $10. Let's say $20 if I am taking a risk reward of 1:2 and my reward is $20. So we will also understand the concept of risk reward in the markets as well, but I'm just giving you a gist that how you're going to maintain your capital while regularly trading in the markets. So let's say if my initial capital is basically $1,000, I'm going to take a stop loss or risk amount of $10 or $20 maximum in every trade. Okay, so the guys who have completed this internship and mentorship properly, they're also going to get the opportunity of $100,000 capital from our side. And whatever strategy I'm telling you right now, if you practice it well for the next 3 weeks, because 3 weeks is the minimum, 21 days is the minimum. On a psychological point of view, you need minimum 21 days to make a new habit, or to understand something, or to make a practice of something. So whatever strategy I'm going to tell you, this strategy is highly proven, and with the help of this strategy, you will be able to make some regular profits in the market. Okay, so let's say if you understand this strategy, that's very well good. And if you're trading on your demo account, let's say small real account, and you're maintaining your risk rewards, and you're doing the same setup, and you're able to practice it, then I am also ready to risk with you guys. That means we will be providing you with a minimum capital of $100,000 from our side. The major thing that you have to understand is this setup and this strategy, and then you have to apply it again and again, because sometimes you will be winning, sometimes you will be losing. Okay, I am very well sure, or let's say I am very well aware of losing. That doesn't mean that you're a bad trader. Losing means that your perspective was not good at that single trade. But whenever you're winning so huge because of the positive risk reward ratios. You're going to win so huge that you will be able to recover those losses, whatever you have lost because of your mistakes, and simultaneously you will be able to make some profits as well. Okay. So what is that strategy that I'm talking about right now? So let's understand the strategy and how you can apply it with a simple thing. I'm not even saying that this is a very, very difficult setup or something. It's very simple, guys. If you just understand it properly, try to watch this video 2 to 3 times, so that even if you have any questions regarding the strategy, you can understand it. And still, if you have some pending questions, you can always contact our WhatsApp number. Okay, so what does this strategy include? It includes majorly 3 steps. The first step is highly important, known as the direction of the market. Okay, it is highly important, known as the direction of the market. Second is the basically POI. And third is the entry and exit. Now, the first question, or you can say the first step, will tell us the direction of the price. The direction of the price can be of 3 types. First, the market can be an uptrend. That means the market is moving up and we are looking for buying opportunities. Okay, so when the market is an uptrend, we are looking for buying opportunities. Second type of trend is basically downtrend, when the market is going down. And when the market is going down, we need to short sell, or you can say sell in the market. So over here, you will look for the selling opportunities in the market. And third type of trend is known as the sideways. That means the price is consolidating and you're not allowed to trade over here. If you try to take any trade in the sideways momentum, then you will not be able to get anything and you will be hitting your stop losses in the higher probability case. Okay, so whenever you are following this setup or strategy, it's very simple. First thing you have to understand is your direction. You have to note down if your direction is upside, downside, or sideways. Now, how will you know this direction? I will tell you exactly the proper setup. Right now, we are just trying to, you can say, understand the steps involved in applying this strategy. Okay, so first major question that you have to answer to yourself is, where is the direction of the price? Second is the POI, or known as the price of interest. Let's say even if the price is moving towards the upside, something like this, I cannot buy from anywhere I want, because the price will take pullbacks, and whenever the price is taking a pullback, it might hit your stop loss. So let's say even if the market is right now in uptrend and you started buying from here, okay, you put up a stop loss and you put up a target. What is going to happen? Market will come down, take your stop loss, and then will try to go in your real direction. And that's what happens to the major traders in the market, that they are not able to make profits on a regular basis. They will let their stop loss touch and then the market will go in their favor. And then they ask question to themselves, why is this happening that whenever I'm taking a trade, my stop loss is getting hit and I'm not making any profits? Because you have to understand that you have to choose a specific price of interest, or known as the point of interest. You can't, even if the uptrend, even if the price is an uptrend, you can't just buy from anywhere. Similarly, when the market is in downtrend, you can't just sell from anywhere, because the market is always in a swing momentum. The market is not moving in a straight line, something like up or down like this. So what the market is trying to do, the market is actually making swings in the market. Okay, and because of these swings, there are chances that you will be able to hit your stop loss as well. So what you need to understand is, whenever the market is in selling trend, something like this, then you need to choose a specific point of interest in the market. That means your price of interest. If you start selling from here, then the price will go up and hit your stop loss. Right. So what you need to do, you need to understand and you need to point out where is your price of interest, where you can start selling from. And in this strategy, I'm going to tell you very easy setup, guys. I'm telling you, this is highly working. I have retested this setup various times. I have even forward tested, even I have made some lot of good money because of this setup only. Okay. And it's far more easy to understand, that you will be able to get it in a way or two. Okay, so from here we are doing what? We are doing the second step, known as the POI, choosing the price of interest from where I can sell or from where I can buy. Okay, and third is the major entry and exit. Third is major entry and exit. Let's say even if I choose this price of interest, or let's say if I'm choosing this price of interest, in both the point of interest, I can sell or buy in the market. But not all the time your price will react towards your point of interest. Sometimes, let's say if the market is moving something like this, and I'm choosing this as my point of interest, that if the price comes back over here, I will sell. Right, the market is coming back. The market is coming back to your point of interest. But rather than going down, the market still moves up. Okay, so what can protect us from not happening this, or from not taking trades in this situation like this? So third rule, which is very important, and you need it's very easy as well, is known as the entry and exit in the market. That there will be a specific rule because of which you should take an entry in the market. Okay, so these are the major steps that you need to understand while the market is behaving in some pattern, and you can take some trades for your major profit business, and then you will be able to apply. You should apply it on a regular basis. Okay, even if you're making some losses, that's okay, because whenever you're going to make some profits, the risk reward ratios are going to maintain in a positive manner, and you will be able to recover those losses in these profitable trades, and you will be able to make some more money. Okay, so let's go on the chart, guys, and let's understand what is the strategy, how can we use it on a regular basis, and what are the rules. So the rules which we are going to use is the majorly the same thing. These 3 steps we are going to use: the direction, the POI, and the entry and exit. Okay, So this is the gold chart in front of you. Since this is a Forex mentorship, we are going to focus on the gold chart. And in this gold chart, I'm going to show you how you will apply these 3 steps again and again. So first of all, our major concept is the direction of the market. Now, when I'm looking at the direction of the market, if I'm looking, you can say naked eye, then I can see that the market is moving up. That means this is uptrend. The market is moving down. This is downtrend. Again, look over here. The market is moving in a sideways momentum. That means the market is sideways. Okay, now I can see it bluntly and I can assure myself that I will be trading on the specific basis, right? Now, this is a very, very naked way of doing it, very simple way of doing it. I'll be giving you a technical tool as well from which you can understand either the price is moving towards the upside or downside. First thing, what you need to understand is where is the direction of the price and what is the tool that I can use to use to estimate where is my direction of the price. So what are we going to do? We are going to take help from some indicators which are very powerful and which will be able to make you understand how the market is work. Okay, so for the direction, you can go to these indicators and you will write down EMA. Okay, you will write down EMA or moving average exponential in the market. So as soon as you will click on this button, there is a blue line over here. If you can see over here, okay, there is a blue line which will be in front of you. This is a moving average exponential which is showing you whether the price is moving towards the upside or downside. But because we are looking for a good trend, or you can say good eye for the trend, what we are going to do, we are going to change the settings of this EMA and we are going to use the inputs of over here. Delete the 9 from here because the default setting at the trading view is 9, but we are going to use over here 21. Okay, we are going to use the EMA for the 21. Okay, so this is my 21 EMA over here and I'm going to change the style a little bit so that it becomes a little bit more clear. So what I'm going to do, I'm going to put it yellow, some little bit bright, and double the line. Okay, so you can do this now. Now what you can see on the chart is basically a perfect, you can say indicator, or you can say a perfect line which is showing me what? Which is showing me whether the price wants to move towards the upside or whether the price wants to move towards the downside. Okay, so how to decode this EMA as well? Now try to understand this. Whenever the price is moving towards the upside, you will see that the price will retain or price will sustain above this EMA in the market. Okay, price will sustain above this EMA. Now there are various methods of using this EMA as well, and I have put one more video on the channel itself known as the clock method of the EMA, from which you can understand the deep direction of the price. Let's say you want to use this EMA for higher or better chances, then also you can use the clock method, which is already available on the channel. But over here we are doing a simplistic method so that you can have more profits by investing less time in the market. So over here what we can see is that whenever the price is moving towards the upside, price will try to sustain above this EMA. And whenever the price is in downtrend, look at this, whenever the price is in downtrend, you will see that the price is sustaining or price is basically below the EMA on this level. Now whenever the price is upward, okay, the price will sustain above the line, and we are looking for what? We are looking at the uptrend in the market. And whenever there is uptrend in the market, you're just looking for buying opportunities. You have to remember this, guys. You have to look for only buying opportunities. So if I'm looking over here, the price is an uptrend, and how I'm very sure about it, first I can see it with the naked eyes. I can observe it properly that the price is an uptrend. But the EMA, or the, you can say, a mathematical computation of the average moving exponential, is also verifying me, or you can say confirming me, that the price is really in uptrend in the market. Okay, and whenever the price is moving towards the, you can say, is sustaining below the this EMA, that means the price is downward. Like this over here, the price is downward. No doubt it is for the short period of time, but still we can see that the price is moving below the, you can say, EMA of this line. Over here, you can see this is a proper downtrend in the market. So price will sustain below this EMA. And whenever, so I told you, there are 3 types of the trend. First, whenever the price is moving above this EMA, that means the price is basically making an uptrend. Similarly, when the price is sustaining below this EMA, that means the price is in downtrend. And whenever the price is touching this EMA again and again, like over here, what is the price doing over here is that the price is actually making, or you can say, is touching this EMA and retesting this EMA again and again. Price is not able to go sustain below downside, and the price is not able to sustain above side as well. Okay, so that means the price is in sideways. And whenever the price is in sideways, you are not looking for any kind of opportunity in the market. Let the sideways trend be over and then look for opportunities. So over here, what I can see is, as soon as this sideways momentum is over, I will see that there will be a breakout in the market. And as soon as the price is sustaining above this EMA, then only I'm looking for what? I'm looking for buying opportunities. And it can also happen that after this sideways momentum, the price might sustain towards the downside. So what will happen? I'm looking for, you can say, selling opportunities. But whenever the price is in a, you can say, consolidation, I am not looking for anything. I am not trading at all. I'm not going to risk my money, because in the sideways momentum, let's say you want to buy from here, price will go up and then will come down and will take out your stop loss. You started selling from here, you put up your stop loss, price will go up, take out your stop loss. So this is why we do not trade in the sideways momentum, because the price is just taking out the stop stop losses of both the sides. We need to wait for a proper breakout. We need to understand where is the direction of the trend. The direction either should be stably towards the upside or should be stable towards the downside. Okay, and then only I'm looking for my trade. So this is our first tool which we can answer our first step in our method known as the direction of the price. So whenever, let's say, any layman asks you, since you are a trader, you're a fellow trader, somebody can ask you, I want to invest in gold or I want to invest in some shares. What is the direction right now? How can I trade in the market? Should I buy or should I sell? This is the normal question when anyone is asking. So what you can do is just simply do this. Go to this tradingview.com, open up your chart and put up an EMA of 21 over there. And then try to understand if the price is sustaining on the above this line, that means that the price is in a good uptrend and you should always look for buying opportunities. And whenever the price is basically sustaining below this line over here, below this EMA line over here, that means the price is in a proper downtrend and you should always look for selling opportunities. You are not looking for buying opportunities over here. Okay, so this is a very, very simple tool from which you can answer this major question in the market, where is the trend? Because if you get to know, your trend, and then you will be able to take your decision either to buy or sell very easily. So trend is your best friend, guys. And where is your best friend? You have to look through this EMA, and this EMA will act like your magnifying glass, whether the price is moving towards the upside or whether the price is moving towards the downside. So over here, I have told you very simple thing. The first pattern. So our major three questions was what? Our first three questions of trading anytime. If you're answering these three questions, you are going to have a better profits in the market. First question is direction. So where is my direction of the price? Either it will be upside or it will be downside. And if it is sideways, we are not going to trade. In the upside, we are going to just take a buy. In the downside, we are taking a sell. The second question or the second step that you have to follow and you have to answer yourself is known as the POI in the market. Okay, that means at which price level should I buy from? If the price is uptrend, at which price level should I buy from? And if the price is downside, at which price level should I sell from? Okay, so these are the major questions that you have in the market. So you are understanding, you can say you have decided looking at the direction that I want to buy or I want to sell. But the major question or the next question comes is where, from where you want to do this transaction. If you want to buy, at what price level? If you want to sell, at what price level? Okay, for understanding or answering the second question, we are going to use a simple indicator known as the Bollinger Bands. So I have already opened it over here, but if you're confused on how to use this, go to the indicator section over here and type BB. As soon as you will type BB over here, you will see Bollinger Bands. And as soon as you will click on this Bollinger Band, you will see on the chart that there is some kind of pattern like this. Okay, so it looks like drastic, but I'm telling you, this is very easy. Okay, because sometimes Bollinger Bands, it looks like very competitive, or you can say very technical to you guys, but it's very easy. And this will surely give you a very, very simple POI in the market. Okay, very simple POI in the market. So once you have judged, because I don't want any complex situation on my chart. So once you have understood your direction, what you can do, go on this menu and hide your EMA. Hide your EMA so that you can have a proper setup where my price is already going. So you have answered the first question looking at the EMA. You know that the price is an uptrend. Now hide your EMA and now try to look at the Bollinger Bands. If you want both the indicators to be on your screen, you can use both the indicators simultaneously. But for clarity or for eye purposes, what I do is I just try to use one indicator at a time. Okay, so I have understood that this whole direction of my price, okay, this whole direction is an uptrend. Now, major thing I told you, what is your next question in the market is from where I can buy. Now, look at this very carefully. Whenever the price is moving upside, okay, so over here, let me show you first EMA as well, so that you can understand where is our direction. Price is basically sustaining above this EMA. That means what? That means our structure is towards the upside only. We are not looking for selling opportunities. We are just looking for buying opportunities. So whenever the price is an uptrend, you will see some movement like this. Always wait for a pullback, because as I told you, price will move in swings. Price can't move in a straight line. So even if the price is going up, price will take a pullback and then will go up. Price will not be able to go in a straight line like this. Okay, many people are expecting such momentums, but this doesn't happen. Price is always moving in a swing. So as soon as you will see some momentum like this, the price will take a pullback. The price will take a pullback. And your POI. Okay, so second question. So let me hide this EMA. Your second question is what? From where I can buy. Major thing is I do not understand, sir, from where, which price level I can buy from. So as soon as you see this buying momentum, do not try to buy instantly. Wait for the price to come back in this Bollinger Band and let it touch basically the middle zone. If you will look at this Bollinger Bands, there are majorly three lines over here. This is known as the upper band. This is known as the lower band. and this is known as the middle band in the market. What you need to wait for your understanding where is my price from where I can buy from is that as soon as the price gives the momentum towards the upside, wait for the price to come back and touch this middle range in the market or touch this middle bracket in the market. And as soon as the price touches this middle band, you will see some reaction, from which we will discuss the third point, which is known as the entry and exit. But this is a very, very good POI. And let me show you how it is a very good POI. So whenever the price is moving uptrend, price is always making a support at this level on the middle band. Again, over here, if you will see, the price went up, price come back, price retested this level, retested this middle band, and you can do what? You can simply take a buy from this opportunity. Okay, as soon as the price will try to come at this level and will show you some reaction. Do remember the candlestick pattern, which we have already covered in the last section, because these candlestick patterns are the reason from which we will be able to, you can say, take an entry or exit in the market. But the major question is from where I can buy or sell from. You are using this majorly Bollinger Band in the market, and whenever the price is touching this Bollinger Band and touching this, or you can say retesting this middle band, exactly middle band, this is your POI. If the price is reacting in some way in this middle POI, I am allowed to buy. Whenever the price is an uptrend and the market is coming back and retesting this level, I am allowed to buy. Again, the price moved up, price came back, retested this middle level, or known as our POI, I'm allowed to buy. Again, look at this. Price went up, price came back, retested this middle band only. It is not even going below, but retested this middle band, I am allowed to buy. The price went up. Now what did happen? Over here, you will see that the price is touching the middle band and not going anywhere. Okay, not going anywhere. Now, this is one such, you can say, momentum where you will see that the prices started moving in the sideways direction. Okay, and what you can do is, for confirming your trend, you will see that you can use your EMA again. And you will see that the price is basically touching this EMA again and again. And the EMA section, I told you, whenever the price is touching the EMA again and again, that means the price is moving in a sideways. So whenever the prices started moving in the sideways, do not trade them. So over here, you will see that you have taken 1, 2, 3, 4 opportunities for buying. And after 4 opportunities of buying, price started in the sideways direction. Now let it go in the sideways direction and wait for the major trend to continue or sustain in the market. So till the time the price is not sustaining anywhere. Okay, now what I will do, I will hide the BB, or you can say the Bollinger Band, to look at where my direction is going. Okay, so after this sideways momentum is started, now just focus on this, you can say, EMA in the market. Let the EMA push and let the price sustain somewhere. As you can see, the price is retesting the EMA again towards the upside or downside. This is all sideways momentum, or known as a consolidation in the market. Okay, wait for the price to give a proper sustenance. Like over here, what you can see, as soon as the price comes down, the price basically sustaining towards the downside. When the price is sustaining towards the downside, only then try to make a mindset or try to make a decision whether you want to buy or sell. Now, if the price is sustaining towards the downside, that means the downtrend has started. When the downtrend has started, what you can do, again, go back to the indicators, or over here, you can again make it visible, the Bollinger Band. As soon as you will make the Bollinger Band visible over here, you will see that the price will retest the middle band again and will then try to go down. Okay, so over here, you can see as soon as the price was going down, the price retested this middle band. Okay, so let me hide the EMA for you guys so that you can see it properly. Initially, you might be getting not a little bit clarity, but once you start practicing on this strategy again and again, then you will be able to take the trades and very easily. Okay, so over here, what I can see is, as soon as the price is coming down and is retesting the middle band again, then it is again going downside. So what if I am able to take my trade over here? What if I'm able to sell from here? I am going to make a huge profit in the market. Okay, let's say over here, I started selling, I put up my stop loss, and I put up my target for 1:2. Now over here, you will see that you are making so much good profits while using this strategy. If the price is not coming back and not touching the middle band again, do not trade. It might look like that this trade has worked out, but sometimes this trade will not work out and it will try to reverse from this level. So whenever the price is giving you all the things, that means the price is sustaining towards the downside below the EMA and then touching the middle band as your POI. Only then try to take a trade. Do not trade at these situations. Okay, do not trade at these situations when the price is not retesting the middle band. That means that the price can still reverse from here. Okay, so this is a low probability trade, but whenever the price is reacting from this middle band and then going down, this is a high probability trade in the market. Okay, so now you are able to understand how I'm using this strategy on a daily basis, how I'm making the profits using the Bollinger Bands. This is very easy to understand. And I believe that if you trade at least 100 trades over here, you will be seeing that you are making so much good profits in those 100 trades. Try to do this demo exercise at home. Try to rewatch this video for 2 to 3 times, and then try to retest this video, backtest this video, and forward test this strategy as well for 100 times. As soon as in those 100 trades, you will see, let's say even 30 times you are not right. Okay, you are hitting the stop loss for 30 times because the price has started moving the sideways. Like over here, what did happen? Price touched this, you can say middleman, and then started moving sideways. So sometimes you will hit the stop loss as well. This is not a very hard and harsh game. But whenever you are, let's say, whenever you're losing only 30% time. But whenever you're winning at least 70% of the times. The strategy is having a winning ratio of more than 80%. But it will only happen with practice. Initially, when you will start trading on it, your winning ratio might be 50-50 only, because you might be doing some mistakes while applying the strategy as well. Or let's say the market is not working in your favor. Okay, so what I'm trying to tell you, you will have the stop losses. It doesn't matter. What matters is whenever you are able to find such trades, find any good setup in this trade, then you're able to make some good money in this strategy. And when you're doing it for regular basis, on monthly and yearly basis, you are going to make a handsome return on your capital. So even if you're starting with $1,000 in this strategy, I believe that you will be able to, with proper execution, with proper discipline, you will be able to achieve at least 10%, minimum 10% return on an every month basis. Okay, you just need to do what you need to apply this. You need to do your homework. You need to be disciplined, regularly trade in the market. And whenever the price is behaving in this manner, that the price is either sustaining below or above the EMA, and you are using the Bollinger Band, middle band as your POI in the market, you will be having some good trades. For entry and exit purposes, because the third step, which is highly important, known as the entry and exit, for entry and exit purposes, we are going to use the candlestick patterns, which you have understood in the last section. So whenever the price is showing you a bullish pattern, let's look at over here. When the price retested this level, if you remember in the last class, I told you that this is a bullish engulfing pattern. Okay, this is a bullish engulfing pattern. That means the price is doing what? The price is actually proposing in a favor. Whatever I have a perspective that the price is an uptrend, price is also touching my POI, and touching this POI, price is showing me a bullish engulfing pattern, then I'll be able to take a buy trade from here. So as soon as I see this bullish engulfing pattern, what I will do is I will do this buying over here. I'll put my proper stop loss below this support in the market, and I will try to target at least 1:2. And you will see most of your trades, basically, you will be able to achieve the targets very easily. It's not a very hard and fast rule. Again, whenever you are doing this strategy, you will see some, you can say, moves in the market. So if the price is moving sideways, there will be sometimes that you are not even getting the entry. So like over here, when the price started moving towards the upside, it retested this middle band, but never reacted from here. It never gave you an entry. And what did happen? Price broke down. So this cancels our trade, and you will see you were right if you're not buying from here. Rather, what did happen? Price moved up, again retested this middle band. And as soon as it retested this middle band, you will see a bullish engulfing pattern over here again. Okay, these candlestick patterns we have discussed in the previous videos, guys. If you're not able to understand this, do watch the previous video again. But these patterns will be able to assure you that you are on the right side of the market. You are taking the right trade. Okay, so this is a buy trade example. Let's go on the selling trade and let's see if we are getting the same type of scenario in this or not. So over here, what did happen? When the price was sustaining below this EMA or below the Bollinger Band, the price will retest this middle band. The price is going to retest this middle band, and on this middle band, if you will see, what is this kind of the candlestick pattern? This is a bearish engulfing pattern. Okay, the pin bar and the bearish engulfing, both of the candlestick patterns are present over here. So what you can do, looking at this side, looking at the bearish side of the market using the candlestick patterns, you will be able to confirm your trade that yes, after retesting the middle band, RPOI or price of interest in the market, the price is reacting in this way and the price is moving downside. So this is how you can use this strategy again and again. And whenever you are having some confusions, let's say you are not able to decide whether you should go for buy or sell, try to not trade in that level as well. Because whenever you are confused, let's say over here, when the price is sustaining and price retouched this middle level over here, now you're confused whether this is a bearish engulfing pattern or something like that. It is not. You will see this is not any kind of candlestick pattern in the market. Okay, so you will not be able to take the trade over here. So you need to have a proper understanding of the candlestick patterns and the strategy. Because when you connect these two, you will have so much good trades in the market that you will be proud of yourself, that you're making regular money on regular basis. And whenever the price is doing what? The price is changing its direction. It will show you there and there itself that I am changing it, and you will be able to take some buy or sell trades in the market. Okay, so this is the whole strategy that I use sometimes for my regular profits. No doubt I'm an institutional trader as well, so I trade without indicators as well. But you as a beginner, if you are looking for a simple strategy which can make you some simple money on an everyday basis without so much hard work, then you are most welcome to apply this. And if you want to do some advanced trading, okay, if you are looking for something advanced and you are not able to, let's say, satisfy yourself with this thing, you want to learn the price action to a very good level, then you can also apply with us. I give personal one-to-one trainings in the market so that you can understand what is institutional trading. And in the future, we are also uploading a course on our website, thenovelasset.com, in which you will be able to understand how the price is really moving, why the price is making a support at any level, and why the price is making a resistance at any level, and from exactly where we can trade. And you will be able to receive risk reward ratios of around 1:5, 1:10 very easily with the help of institutional. But when we are doing retail trading, when we are not doing so much hard work, when we just want to make some good money on a regular basis with not so much hard work, this strategy is one of them. The strategy will give you that boost confidence initially on initial basis that you will be able to make your money or make your livelihood or make your pocket money. And after that, you're most welcome. Once you have experience of 6 to 8 months, you're most welcome to learn live trading with me and how I live trade on the news patterns as well. Okay, so this is how you can trade on a regular basis, guys. I believe that you're able to understand the strategy well. And if you have any questions, you can just directly contact on our WhatsApp number regarding the strategy. But before doing so, I would believe that you should rewatch this video because there are something you might have missed in the first watch. I will suggest you try to rewatch this video for 2 to 3 times and then write down the rules for the strategy. Write down the rules which I have just told you in the market. What is the exact EMA, how to use the Bollinger Bands, and what are the exact entry and exit patterns. Try to write down your trading plan and then trade your plan. Okay, so first you plan your trade and then you trade your plan. This is how we achieve the regular profits in the market. So I believe that this video is helpful for you guys. This mentorship basically is over from my side. You have one remaining session with Urvana ma'am over here related to the trading psychology. So she will be able to tell you about the trading psychology inputs, how you can maintain your emotions while trading in these markets. No doubt, technically, you can use this strategy. You can use the institutional price action. You can use the retail price action, depending upon whatever your choice is. But the major thing is whenever you're trading, live trading in the market, you have so many emotions like FOMO, like fear, like greed. Okay, these emotions actually, you can say, make you desperate for profits and make you fearful for losses. How to avoid these emotions or how to manage these emotions while live trading in the market? So Urvana ma'am will give you an insight session regarding the same. I believe that you have learned a lot of good things from here, guys. And if you have any input or feedback, do write in the comment section. Okay, guys. So let's meet you in the next video. Till then, good luck to you, traders.